Good morning, everyone. This is Anne-Marie Band for the Benzinga Pro platform and the Moneyball Morning Report. I know I've been away for a while. We can thank Hurricane Ian for that. I was about 10 miles from actual landfall, and so that was a little bit of the pits. We just got internet back 2 days ago, but as it would happen to be, I am in Chicago for the week, and so we'll be looking at the markets from here on the Central Time Zone. So let's take a look at what we've got. As I mentioned in the images, for those of you that belong to the platforms that can see some of these things, we did do something very interesting last week. It was the first week in 9 weeks that we closed above the tight simple moving average. And this morning, we are trying to hang on to that. So let's have a look at first trend and then momentum, and then see what we expect for the price action in the days ahead. First of all, from SPY, we can see that our moving average ribbon is way up here. It's a little bit flat. So there's a lot of momentum that had been moving up that got depressed, and now it's a little flat to down. The tightest average is way down here. So there's quite a bit of bouncing that could occur, and we would still not break the near-term negative trend. All right, and so this is that move where we're underneath the moving averages, we're under the VWAP, we've got negative momentum, and it tells us our bounces are sell zones as long as we keep making lower lows, right, and lower highs. This one, we made a higher low, but also a lower high, and so moving right back into form. This time, last week, we had both a higher low and a higher high, telling us that traders are trying to pick a bottom here. Now, why would they want to try and pick a bottom? For both the SPY and the Qs sitting below us, this orange line tells me the low of last year. And so what traders are trying to do is come in at value areas where they think to themselves, okay, we've wiped out an entire year. Surely that's a value event, and somehow we've got to make it back and move up through the space. So I've got some breakaway lines set up for us, 376 for SPY. We're just below that. Once we get above it, more traders will start to buy, and we can break out up into prior highs over here. The breakaway line for the Qs is 276. Again, just shy of that number. We have tried to come in and broken it once, but now on the pullback, we've had a tough time holding those breakaway ledges, and that's true for both. So what are we really looking at today? We've got a cross current because our tight formations are telling us that we have upward trend and upward momentum. And the tight formations can go all the way from the 4-hour down to that 30-minute formation. But our longer-term formations tell us that we're still in negative drift. Those weekly and monthly forms still show negative price action. The daily is the cross current. It's got trend up, momentum up, but only for part of the formation. And so it really is any man's game. So let's think about what happened last week. The reasons in quotations, that we've had the move up from the lower edges were just before the blackout period for the Fed. They said, hey, listen, we really need to take a look at the speed at which we are hiking rates, and we might need to slow down a little bit. That made the market very happy because the market is a forward pricing mechanism. And then the second thing is what happened in the currency spaces, because currencies have started running the market. And so I'm going to show you those just a little bit. I'm going to show you the dollar index right here. And then down here, I'm going to show you the yen, the Japanese yen. And so the Japanese yen is in a lot of trouble right now because it's continually devaluing because their currency, their central banks are in the midst of yield control. So they don't want to force yields higher at all. And what that's doing is pulling everything down. But what they did on Friday to give the yen just a little bit of help off of these terrible lows is they put treasuries into the market. They sold dollars into the market to help alleviate the currency crunch. If that makes no sense to you, don't worry about it. We'll talk about that later. But what I want you to see is that the dollar moves in the opposite direction of the yen. And this dollar index is mostly a combination of the Japanese yen and the euro. And so you can see that these will move in opposite directions to the dollar. See how this is moving down and this is moving up, right? The yen is moving down, dollar is moving up. So what do we expect to see today? Well, we want to see if all the money that the yen, the Japanese central banks put in was enough to keep the dollar deflated and deflating. As long as the dollar begins to fade, and it does look like it's in a little bit of a fade, as long as this continues to happen, the markets will have legs and bounce because trade is being very savagely affected by the strength of the dollar because our industries do not have pricing power when the dollar is very strong. We have buying power, but we don't have pricing power because all our goods are very, very expensive across the pond. All right, so there we have it. What do we look at today? You still want to keep an eye on the dollar. You still want to keep an eye on the euro or the yen, which the yen probably is in a little bit more dire straits than the euro at this juncture. That's not going to be the same at a later date. That's probably going to be flipped, but we don't have to worry about that right now. Okay, long story. I know I spent a lot of time talking with us. I miss doing these. We'll be back to doing them every day now that life is a bit better. What we are taking a look at are the big, and I mean great big earnings events we've got going on. It's a very big earnings week. I believe 150 of the S&P 500 report. And so that's going to do a lot of things in the market. Right now, what we're doing is struggling against the edges. I do want us to take a look. Let's see how the diamonds look. I want us to look at the diamonds because they are moving, particularly in the last several weeks, they are moving much more strongly than, say, the Qs, right? Look at this, 3 up weeks. The Qs could only put together 1 up week. Everything's been straight down. And so that means the components in the Dow are holding strength. Now, the components in the Dow, we really need to think about which components, but that's going to be pharma, energy, and other elements of healthcare insurance, and that sort of thing. That's really where you want to hide in plain sight. All right, that's it. I'll see you all tomorrow.